Alright guys, this is Luis Morelos and Abniel Torres, Trading with Logic. And we are here at the Rocky Mountains, a cabin. We're spending time with our families. We've become very good friends since he took the training back in 2017. Now he has been progressing a lot. I can say that he's one of my best students. So we have created this relationship, this friendship. And that's why you're going to see him more, because I think that this transition is worth sharing with a lot of you, because in that way you can have the right expectations that is hard to find out there, because most of the attraction is like either objects, big houses, exotic cars, money. But the problem is that it's so overwhelming when you are trying to trade and you face the realities of trading and the misinformation, that it makes it very difficult for somebody that is just starting in this path. We're going to talk about the difference between a speculator and an investor, because I think that that's one of the main problems that make people fail into this activity. Why? Because you're mixing both. You're thinking like trading is like an investment, and in reality it's a speculation. So from your point of view, once you understood this difference, like how it changed.
So when you start in trading with everything that you find in YouTube, everything you find in all social media, you will understand, and perhaps you may relate to this, that everyone is talking that rentability is just going straight all the way up and build your account and raise your account all the way to 100,000s until you actually live out of trading. When in reality, my experience, thanks number one to your mentorship, was that the trading, I use it as a monthly raise. Basically, I still working, and every month, every week, perhaps I was making a withdrawal from my account from trading. That money helped me to eventually pay off a lot of debts, such as the student loan that we spoke in the previous video, such as a car loan, mortgage, personal loans, etc. So more likely, the speculation is not investment. That's what I understood. So I'm not thinking that in 5-10 years I'm gonna start living from trading. Actually, speculating, I started living from trading since I became profitable and actually took experience and the skills. So more likely, I can tell you that speculations is giving a raise, salary raise to yourself every month, if you think about it, until that money start growing, and instead of being $100 one month, then becomes $500, then becomes $1,000, and then all the way until you want it. So more likely, a speculation is not investing at all. More likely is you trading and then eventually removing or taking all the benefits of the market, let's put it like that.
You have to also see it as, when you hear like these athletes that they get like totally a guy from university, he gets drafted to the NBA or to the NFL. If you think about it, like suddenly he got a raise in income, right? Now he's making millions of dollars. But why is it that years pass and most of them get broke, right? Like if they never made that money, because they never really understood how to use that profit, right? That's increasing profit. They never understood how to use it. Yeah. Because they never really became investors. They just became a more profitable athletes, but that's it. So when you come to trading, yes, you can be profitable. You can increase your profitability, but the problem is that what you do with the money. Once you start making money, what you do with it. It's important that you understand that once you make money, you have to have a grasp of what you're going to do with that money. Because what is it that you're going to, let's say, go from 10,000 and then you grow that account to 100,000. Well, you're going to think, okay, now I can go to 200,000. I can go to 300,000. Okay? You can go to $1 million, right? The $1 million, idea of once you get to $1 million, like your life is going to be just perfect and better. But it's just the same thing. What are you going to do with that money? But if something in the economy collapses, or the broker just goes bankrupt, or maybe you haven't gotten to these leagues where you start seeing your stops not really being executed, like suddenly you have some orders that like they were not there, like how you can prove that those orders were not put by you, right? How you can handle those situations that because you never use that money, you get into problems that you were not really expecting because you thought that once you find your strategy, you just obey the strategy and then you're just going to make money, and then your problems are going to be solved. So an investor, yes, an investor can make a one right decision. Meaning like I bought a house and that house was in a good neighborhood, was at a good price. I made a good inspection. That first decision, just by holding the property within years, that property is going to value more. Just one decision. But that sounds kind of like when somebody tells you, find the strategy. Because once you find the strategy, then everything is just going to go up. And that's the problem, because it doesn't work that way. Speculation is about you, the decisions that you take, the risk you take, how you manage it, when you get out, right? Yeah. So those things are more psychological. It's not about...
And they're changing based on your circumstances. It's not like every day you're going to feel the same way. It's not like every day you're going to have the same time, you're going to have the same opportunities. So more likely, the strategy is something that is being sold out there, that I'm selling you the best strategy so you can make thousands and thousands of dollars. But at the end of the day, what happens when the strategy stops doing that? You look for another. So you're in a constant look of a strategy because the trading is not about strategies. I have figured out after all these years with you that literally it's about you as a trader. It's about you as a person and your skills and your discipline, and not at all they tell me what I should do so I can do it. So that mentality is not real. It doesn't work in this environment called trading. More likely it's what I'm doing, why I'm doing it, and how I'm going to do it, until when I'm going to do it. So more likely an investor is completely different from a speculator. But a lot of people are trying to
fit it into the investment because it sounds good, right? It sounds more intelligent, sounds more attractive, right? You have to understand, it sounds less risky, right? Because if I talk to you as if this was an investment, you feel like safer. But if I tell you, well, you don't control volatility. So it's risk tolerance and volatility. Those two things, the only one that you can control is risk tolerance, right? Volatility, you cannot control it. Volatility is the world. It's like you don't know how the markets are going to react to the next elections, or how the Fed is going to increase or not increase, or how much manipulation the banks need to accumulate in order to put some orders to the buy or to the sell. You don't control that. So the problem is that you're looking at this as if you had risk tolerance, and as if volatility is something that you just overcome by finding the formula. So at the same time, you have to understand that it's the same mentality as an employee. Just think about it. If you just think that trading is about like finding the strategy, well, it's like saying my boss is my strategy, right? I have to obey my boss because my boss pays me if I obey. If you think that you're going to find the strategy and you're going to invest the money and people are going to follow you, well, the investors that put the money towards that strategy are also your bosses. So if you are asking somebody, tell me what to do, give me the strategy, tell me why you enter and why you get out, you have the same mentality as an employee. Tell me what to do. That's why this industry is appealing, because most people think like employees. Most people have earned money by obeying, by following, not by making their own decisions. So that's a very key factor in speculation. Speculation is about making your own decisions, taking your own risks, right? Knowing yourself, making mistakes, and that's an important part.
What about an investor? I mean, since we're already talking about speculating and become a speculator and understanding that it's not an investor, then what's an investor? What we can tell them about becoming or being an investor?
Well, me as an investor is somebody that is expecting something better in the future. Because even in a speculator, you expect something bad to happen in the future, right? But in the investor, is the opposite. You never expect that what you're going to invest on is going to go bad. So that's an important difference. So either you buy a house, even if you get married, you're going to invest years, energy, time into a relationship. Now, obviously, you don't want it to work out. So you're going to invest. So that's the mentality. Somebody that is hoping for the best in the future. Now, an investor is somebody that is going to use his own money to acquire goods that are going to bring him or bring her more money in the future. It can be a house, can be gold, silver, stocks. So you are investing on something that within time has a trend of increasing. But this is within time. And that's the same, if you think about it, it's the same growth that people are attracted to speculation, right? If they see a chart that, it goes like smooth like that, they feel safe and they want to do it. But if they see more volatility and drawdowns and all that, like, oh, wait a minute.
It's not profitable.
Exactly, because the problem is that you're thinking that volatility is bad, that drawdowns are bad. But that's the key of being a speculator. Those are actually the opportunities that an investor doesn't have, because an investor is just going through time, several years. But a speculator is like he can go to the sell or buy. You have more malleability, more opportunities, but you need that personal skill, experience, patience, and all that work that you put into it in order to do it. I buy houses, for example. What the speculation allows you to do is just like Abniel, he was able to pay his wife's student loan. So what happens? Suddenly the $400 that you pay a month, right?
Yep.
Instead of the money going away from their family, they can keep it. They can make their savings accounts bigger and faster. Now you add that to speculation, like he said, it's an increase in salary. It doesn't matter like if it's $100, it starts like that, right? Or maybe next $200, then it goes to $1,000. Well, what's going to happen? Well, you have you reach, let's say, $30,000 in half year. So you know that at least in Florida, you can still find properties for $150. You have a good realtor. You put $35,000, which is like 20%. You can put more or 20% as an investor. You use that money that you save, and then you use the leverage from the bank so you can control that property, and you start getting extra income. That's extra savings, right? So suddenly speculation allows you to jump from just speculating and increasing your salary and thinking that it's about making thousands and thousands of dollars, and then you start buying your Lamborghini and buying your house, and travel like Dubai and staying in a $20,000 a night hotel. I mean, wealth
sounds good.
Sounds good and it's attractive, but it's not real. Real wealth, just sit down and talk to a wealthy person. Like, if you know how to recognize a rich person from a wealthy person, then you're going to be like good, like you're going to understand better. A rich person, yes, somebody an athlete is a rich person, but not necessarily a wealthy person. So a wealthy person is that person that has little by little increase the money, the assets, and when you, after years, it's like a snowball. But the important thing is, like, speculation is just one part of that process. It's just one way. It's not the only way or the way. It's just one way. When you start seeing it in that way, I think that also in your mind you're going to be not as stressed out.
Yeah, rushing it out.
Like, I had to do it. And what's the strategy? You listen to a guy that's telling you, I only have like 3 patterns, and that's how I make trading, right? Like, if that's just 1, 2, 3, and that's it.
Yeah.
You just have to memorize it, and that's all you have to do.
You follow all the way to the rule.
When you understand that that's not real, then I think that your mind is more clear to understand, okay, now since I know reality, okay, I'm more patient. I just realize that it's not the way, so I don't feel stressed out and on trying to fit into a way of thinking of trading, or trying to make it in a way that fits this knowledge that I'm supposed to know. You feel less stressed.
And actually you become more mature faster because of that thought process that you're putting in place. And that's exactly what Luis helped me figure out while I was in the advanced training with Trading with Logic. And after that, it's not just I became a speculator and that's it. It's what I do with the money later. How I manage the account. All that is a process of maturity that comes with the time, with experience of failing, of losing trades, and then eventually raise it up again. It's like fall, go up, fall and go up, until at the end of the day you don't fall that much. Or if you fall, now you understand how to wake up faster. So trading for myself, thanks to the mentorship that I've been getting from Luis, is more likely completely different from an investor. You gotta think that as a trader and a speculator, you're gonna lose You control how much you're losing, but it's actually it's a raise of income that you're making to your family and to yourself. And then an investor, you can actually become faster as an investor by raising all that money and putting it into an account that eventually you pull out of that account, maybe in a bank account, saving accounts or stuff like that. Then you pull out of that account and then you place it into a real estate, or you place it into a business or something like that.
An investment is going to be the same thing. Investment, you go to something that you have some tolerance to it. I chose houses because I like building, I like welding, I like, creating. So to me, that's something that I like doing. And I know how it's done, so I don't get cheated by, people trying to give me like higher prices and all these things that I can think about. Like they tell me, oh, you need to change the whole AC unit. And I'm like, why? So I can ask those questions and be like, okay, no, I don't have to. I can make this other decision. So obviously in an investment, you also have to have that experience. But the important thing is an investor, as I said at the beginning, just has to make the right choice once. A speculator is a constant decision-making process.
An
adaptive process. So that's why you need more skill. An investor pretty much needs more money. That's it.
Yeah.
Right? So if you are able to raise more money faster, save more money faster, you're going to invest, in things that over time, they just increase in price. But a speculator, you need more skill because constantly it's a decision day after day, week after week, that you become better at it, the more you practice. So in the way that I think that I told you is that you never should try to increase your profits with a bigger account. Because people tend to think that the more money they have, the more money they're going to make in trading. But the problem is that that's not the skill you want to develop. You want to develop the skill of with the smallest amount that you can handle, you can trade, and you can double, triple that amount. So if you're in the US, how many people have a car loan for $500 a month? A lot of people, I know, have that. So you're willing to lose $500 a month because in reality you're losing. Now you have your piece of metal and wheels. You think that you have something, you own something. When in reality you're losing money every month that you're paying those $500. Yes, maybe you sell the car, you're going to get some, but you're losing $500. So if you think about it, you're willing to lose that money. If your energy bill is like $500, yes, you're using because obviously you have the light and you can use it for other things in your house, but you're losing that amount of money every month. So you have to come to that understanding that once you start speculating and developing that skill, you have to be willing to think and say how much I can lose, even not once, but twice, maybe, how many times like I can lose before I can develop this skill, right? But a lot of people don't go for that. They just go for give me the strategy. And if the strategy doesn't work, they go for something else. Or they go for something, they jump into too many different things. When in reality, you think about time, if maybe that has happened to you, but if you are exposed to something for a long period of time, there's no other way but you're going to become somehow better at it. Maybe not the best, but even if you don't put too much effort, somebody that comes to the States and has been living here for 20, 25 years, they can start speaking some English, even if never took classes, never like really tried to involve and learn it. So eventually I'm from Mexico. I know Mexican people that never went to school and has been here for 25 years and they speak. Why? Because they've been exposed to it. They understand it. So a skill, because speaking as a skill, is developed over time. Obviously, you want to develop in the least time possible so you can start getting results. That's where mentorship and somebody that has already been there can help you. But eventually, you're going to become better at something. But the problem is that people change too much from different approaches that they get even confused and they don't keep track of it, that they think that all methods and systems are just something different, but they're just the same thing. So if you understand the principles from the beginning, you focus on the principles that happen with or without you, with or without us, and just by exposing yourself to them day after day, week after week, you're going to become better at it. That's it. And from there, just how much you want it, perseverance, don't get distracted, discipline, and see it as he said, an increase in salary that is going to make your savings accounts bigger and bigger, so then you can invest and then you create wealth for your family. That's how it is. That's how people have done it for like hundreds of years, right? Different businesses, different industries, but that's how it's done. The less you depend on the money of the bank or other people, that's the more wealth you're going to create.
So I think that we can summarize that an investor is not a speculator, and that a speculator can become an investor faster thanks to the profits of the market, and that is pretty much putting the right mindset at the right time instead of just trying to mix them, because that's what is being sold out there in YouTube and Facebook or any other social media. So I think that pretty much this
the topic that we wanted to talk to you about. We thought that was a good topic to record. The most important thing that is holding you down are the ideas that everybody's putting in your mind out there. So if you can clean your mind and start thinking with reality, then the path is going to be clearer for you to walk and walk and walk until you reach where you want to be. So see you guys later.
Till next time.